So it's not moving on to the next slide, guys. Oh, there it is. So by 2030, stablecoins will be the dominant form of money in emerging markets. That's a pretty big statement, right? First of all, like, who am I to say this? So I've been building banking infrastructure for like 10 years now. I built 1P, which is probably one of the fastest growing payment processors in Latin America. We were doing over $3 billion of payments processing a year. And this is something I'm completely convinced about. and now I'm going to explain where that growth is going to come from. So I think there's like three kinds of use cases for stablecoins in emerging markets. The first is as a store of value. And those cases are based on USD. And that's, for example, DAI, USDC, USDT. The next case is investment products, sort of like what we were seeing before, like yield-bearing stablecoins. So those are based on investment products like bonds or treasuries. And those are USDM, Ondo, Ethena, et cetera. And the last one, which is the one into which I'm going to delve more, is financial infrastructure. And it's based on local currencies and payment instruments. And that's what we do at Minteo, so that's COP-M. So stablecoins is a store of value. They're based on dollars. For example, USDC, USDT, DAI. And this is something that's like, it's hard to understand when you don't live in an emerging economy. But like getting access to like dollars is very hard. So like most banks don't open dollar bank accounts. And those that actually can are like very reluctant to do it for like local people. So like the easiest way to like save in dollars, which is an obvious hedge against local inflation, against local currencies, which are like, tend to like go down in price, is holding stablecoins. So, and that's pretty much what first took off. The next use case, so it's investment products. These are based on US treasuries. And these allow people to invest in US markets. So like right now, if you live in, I don't know, Colombia, Chile, you want to open a brokerage account, you need to have at least $25,000. This is a screenshot I took from like Charles Schwab International yesterday. You can see with a minimum of $25,000, you can open an account there. The average monthly minimum wage is $250. So you would need to save for like 100 months to just open an account and start investing in the US market. That's ridiculous, right? Or you can go and get USDM, and you're pretty much exposed to the same stuff. And this is why the volume is taking off in Latin America very quickly. So that's why it all makes sense. And the next is stablecoins as financial infrastructure. And then, but why do we need stablecoins as financial infrastructure? And it's because existing financial infrastructure doesn't really work. And this is my experience. So like ACH in Colombia, where I live, has 8% downtime a year. 8% downtime is ridiculous. Like if you think about it, that's like several hours a month that the bank is down. Bancolombia, which is the biggest bank in Colombia, was down for 3 days, like an entire weekend. So people like couldn't use their cards, like they couldn't use like their bank accounts, like you had to go and get cash from like a friend because the bank was completely down. That seems very crazy. That's the reality in a lot of emerging markets. It's expensive. Most of the APIs are broken, or there's no banking API. So like if you want to build a financial product, it's pretty much impossible to do so. And then when you are able to do it, like they're very slow, they're cumbersome, they're a fragmented system. I like to think of existing financial rails sort of like as everybody did their own highway. So it's like a cobble street in one place, you get like brick streets on another place. It's kind of crazy everywhere. And then for me, blockchain is like, oh, it's like paved roads, like standard highways for standardized cars or containers. Can you imagine how like shipping was before containers? Like everybody came up with their own packages and shipped away like anyway. That's how the financial system works. So like pretty much everybody comes up with like their own like packaging. And now we have containers. And it's kind of crazy to think of shipping something in a container nowadays, not in a container. So what don't emerging markets have? We have no Venmo, no Robinhood, no Cash App, no Bizum, no SEPA. We pretty much have like no decent financial products. I don't know if any of you are like live in emerging markets, but it's horrible. We basically have like shitty bank apps. That's the only thing there is. But that doesn't mean the market's not huge. And it's been proven wrong. So like there was this guy like 10 years ago who said like, why do like savings accounts, and this is like the most basic product, like saving accounts in local currencies, like they really suck in Latin America. They're terrible, they're slow, they're cumbersome, they're not based on mobile. And his big idea is like, let's do a bank that works on mobile. which like, I think if I tried to pitch it to VCs, they would look at me like, are you an idiot? Like, are you gonna raise money for like a savings account? Like there's 100 companies that already do that. But the guy went ahead and did it. He got a catchy name called Nubank, which is basically naked in Brazil. He has accrued 100 million users in the last 10 years. He's doing $8 billion in revenue and $1 billion in profit. It's probably the most valuable startup in Latin America, and probably one of the highest growth companies in the history of the world. So when you actually do like decent financial products, like the market is huge. The opportunity is like really big. And this, what's the key here? Like they built all the tech stack from the bottom. It was expensive, it took a long time, but the user experience is amazing. So, and this is another big statement. Financial infrastructure stablecoins leverage blockchain technology, lowering the barrier for building amazing consumer and business products. So imagine if like David Bellis had like blockchain 10 years ago, like Nubank would have been so much quicker in growth. Like there'd be so many more new banks, like, and the region would have like way better products. And this is why like I think like everything is going to be stablecoin based between here and 10 years. Thank you. Thanks. But then stablecoins are not dollars. And I know this might sound like a kind of crazy statement after being today's at the Stablecoin Summit, because like pretty much everybody's talking about USD. But there is a world outside of USD. I know it sounds weird, but there's like 5 billion people who use other currencies on a day-to-day basis. It's not just a couple of us. 97% of operations are done in local currencies. If you go like anywhere, like in Africa, Southeast Asia, Latin America, like we buy houses in pesos, we do everything in our local currencies. There's a big analogy. Somebody asked me like, why don't you use dollars for everything? Why don't you save all your money in dollars? And I was like, and I'm gonna ask you everybody a question. So like, do you think Bitcoin is gonna be worth more than the dollar like 10 years out from now? Yes? Would you save all your money in Bitcoin? And this is a weird audience, but like a lot of people are like, no, because I have to pay my mortgage in dollars. What if Bitcoin goes to like 5,000 for like 3 years and then I can't pay rent? It sounds kind of obvious, like it's the same for us. I mean, we love saving in dollars, but at the end of the day, like I have to pay for my mortgage in pesos. So like I need to have pesos. It's very risky just saving in other currencies. And like most local transactions need to be settled on local coins. Like you can't go and buy a house in another currency. It's very complex. Users don't understand it. I mean, we had an NFT marketplace a couple of years ago. The #1 most asked question is like, what is USDC? And #2 question was like, what is USD? So people understand like saving in dollars, but they don't understand like using them on a day-to-day basis. And that's what we're doing at Minteo. So like we built COPM, which is a Colombian on-chain peso. It's one-to-one backed in fiat and local banks. We are gonna get like the rest of Latin America out very soon, hopefully out all this year. So we're gonna have Chilean stablecoins, Peruvian stablecoins, Mexican stablecoins. And this is enabling like a new wave of financial products that are like amazing. So I'm gonna tell you about like more than us, like what our customers are doing. So Litio, for example, has over 200,000 users with COPM-backed debit cards. And I know this sounds kind of crazy, but like, I have my card here. Please don't record the number. It's backed on COPM. So every day, like I spend from it and I see like COPM. There's 200,000 people with one of these in their wallets. They're basically a bank in dollars. So like you save in USDC, And then when you want to spend your money, you change it back into COPM. On stablecoins, you do a very quick swap. They use the money, and then they go back to USDC. So it's just like better like bank, a better currency pair. It's more efficient, it's easier to use, and it's a better user experience. And it's kind of crazy that like we've gone from like 0 to 200,000 users in 6 months. So that's like amazing. The next really cool use case I'm gonna talk about is like Tropicus. So they do payday loans in COPM backed by USDC. Interest rates in Latin America are very high. So at least like in Colombia, the usury rate is 30%, and that's 30. So it's a very good business to lend out money in Latam. But then most of the lenders are based out of Colombia, so like international banks, international lenders, etc. So they lend money to like in dollars, but then loans are actually like put out in pesos, because nobody is gonna like mortgage themselves on another currency, because if their like currency completely like collapses, then you're fucked. Nobody wants to buy a car in dollars. It's too risky. It's too dangerous. But then the actual backing is, or the collateral can be in dollars. And the cool thing is also by having like COPM and USDC, we can also do derivatives, so we can like cover the exchange risk. There's a lot of cool stuff going on there, and they're starting to like give out payday loans, like backed in dollars, in pesos. I think there's a really good opportunity there. I think that's gonna be huge in like 10 years out. And the next use case I wanna talk about is Unergy. Unergy basically sets up like solar panel farms, and they allow people to invest in solar energy in a fractionalized manner with COPM. And then you just take your COPM, you put it into like their token, it accrues value, you get yields on COPM. Pretty much, and if you think about it, like if we think like the future is all about tokenization, and pretty much every real world asset is going to get tokenized, and everything is going to be like RWA, it's going to be tokenized in local coins. So people are not going to tokenize like their homes in another currency. Like nobody's going to be selling a house in Chile tokenized in US dollars. It's going to be tokenized in pesos. It's going to be tokenized in whatever currency they live in. Otherwise, it's crazy. And that's pretty much very big. So that's pretty much it. Stablecoins were always poised for emerging markets, yes. I think, to be honest, probably some of the biggest like real world use cases outside of like crypto, outside of speculation, outside of like day trading, are actually for emerging markets. I think the developing world already has a bunch of like very good infrastructure. I think in emerging markets, we still have to get a lot of that. To some extent, we didn't even get like fully fledged fintech, and we're just gonna go straight for like from like shitty like 70s and 90s banking to like crypto, and skip a lot of like the open banking, fintech, etc. trends. That's what I think is gonna happen. So that's pretty much it. Thanks everybody. If anybody has any questions, let me know.